Assalamu alaikum, everyone. I hope you're doing well. Today is Monday, August 25th, and a bit of a reversal today in market sentiment compared to Friday. Friday, we had the big boost from Fed Chair Powell's comments, kind of dovish comments, essentially hinting that a interest rate cut is happening in September. But to be honest, as I said on Friday, I don't really put much weight to that because he doesn't know if it's going to happen in September. I suppose he kind of struck a dovish tone for the sole reason of, getting the administration off his back. But at the end of the day, uh, in the September meeting, it's going to be down to a vote, and there are some economic reports that come out between now and then that may change his mind. That being said, what was not mentioned in the meeting in Jackson Hole is what happens next. What happens after September? And again, I think the reason why that wasn't mentioned is because the Fed doesn't know. The Fed chair doesn't know. Um, he stopped short of saying Allahu Alam, but uh, essentially that's what he's saying implicitly. He doesn't really know what the economy is going to shape up to be. There's a lot of competing factors here. You have the tariffs on one side, which are inflationary. You have AI on the other, which is deflationary and very pro growth. And some people say the tariffs will be a one-time bump in inflation to the extent that the tariffs are actually applied and what rate they are. But then after that, things should stabilize. Other people think that perhaps there are second, third order derivatives to the tariffs, and typically that's what ends up happening. That causes inflation to actually be a lot more sticky and not be a one-time thing. People who say inflation is deflationary, I'm sorry, that say the tariffs are deflationary just don't know what they're talking about. There's all else being equal, the tariffs are not deflationary. AI is deflationary, technology is deflationary, but not the tariffs. And so we have a lot of competing factors here, and I think it's important to think in probabilities as opposed to certainties. So that's what we're going to do in this live. And it's important to be careful. It's important to be very careful because sentiment can shift very quickly. And I mentioned this in a post on X on Friday. Yeah, everyone is really upbeat about the Fed's comments, but remember, the Fed's comments don't really change the fundamentals at all. And the fundamentals as they stand right now are that inflation seems to be creeping up. Every time we get an inflation reading, we get signs that it's not going away anytime soon. And there are still no real major cracks in the economy as of yet. Yeah, maybe there's some weakness in job reports to the extent that you can even rely on them in the first place. But overall, the economy seems to be doing quite well. Earnings are quite good for companies. The majority of companies reporting earnings are beating revenue and income estimates. And so the question remains for the Fed, if it is going to cut rates, what problem is it solving? And to me, the answer to that is not really clear at this point. And therefore, I actually think the market is being a bit too optimistic about even the September rate cut, let alone the rate cuts that come after. Now, there is one problem that the Fed may be trying to solve with a rate cut, which it can never say, and that is the borrowing costs for the U.S. government. There's a lot of refinancing of debt that is scheduled in Q3 and Q4 for the government debt, and if that refinancing can happen at lower rates, it's going to save billions of dollars for hundreds of billions of dollars for the United States. So that's a reason. But the Fed insists that monetary policy is independent from such considerations. But the only logical reason why the Fed would cut rates at this particular juncture is is that is that the borrowing costs are just too high for the federal government, and therefore there's going to be cutting of rates in order to allow for the federal government to refinance. Other than that, as I said, I don't really see a strong argument for cutting rates at this particular point in time. Now, as it relates to the major indices today, VIX was up a bit. That's the volatility index. The Dow Jones was down 0.77%. Russell was down 1%. S&P was down 0.43%. The Nasdaq was down 0.31%. Silver was flat. Gold was flat. Bitcoin has taken a beating, down 3%. Solana's down 10%. Doge is down 10%. Pudgy Penguins is down 12%. If you look at some of the stock performances, Tesla has been having a really good week and indeed a really good month. We'll talk about that. NVIDIA had a good day, relatively speaking, up 1%. Tempest AI, for example, is down 6%. TSM up 1%. All right, so let's talk about what we want to talk about today. So the markets are sure the Fed will cut in September. I'm sure the markets shouldn't be that sure. But the path from there is much murkier, and this is indeed true. I think rate cuts at this point, they're kind of priced in, at least the September cut. About a 30% chance for another cut by the end of the year. I think that's pretty much priced in. I think it's really up to company earnings, to take us higher from here. Company earnings continue to beat largely, then we should be in good shape. If earnings start to slow down, then the market may have some concerns. But I think earnings should be enough, I think, to keep this market afloat and indeed take us higher. But now, monetary policy, as I said, I would not necessarily rely on that. I would not necessarily hang my hat on that for the next leg up. And the probability for a rate cut in September is around 83%. This is up from last week. Last week it was in the low 70s. So a lot more optimism that a rate cut is coming again, for the silly reason that the Fed chair said so. And that, I think, is not a good reason to raise these percentages. I think these percentages leave a lot of room for correction. So when the percentage or the probability for a rate cut is higher, there's a lot of room for that probability to come down. I mean, the maximum probability is 100, and we're at 83. So we're a lot closer to the top than we are to the bottom. And so that, I mean, assuming I'm agnostic about what the next economic report is going to read, that leaves a lot of room for a ugly surprise. So this is why I'm saying investors should be cautious. This is not the time. I don't think this is not the time to back up the truck. There are major reports before the September meeting. Personal income comes out August 29th. Now, the main thing here is core PCE. That's what the Fed really relies on for measuring inflation. And it shows consumer and spending trends. This is going to come out August 29th. So that will be very impactful. And I think it will basically erase whatever sentiment resulted from the Jackson Hole meeting. That is, it will replace it. So I don't know if it's going to be positive or negative, but it will certainly replace it. People won't remember what the Fed said at Jackson Hole and after that report, I think. All right, so you can skip the trade balance. I mean, that's less important. It's important, but less important. International trade comes out September 4th. Then you have monthly employment. That's important. That comes out September 5th. This is the most important pre-Fed meeting data, focuses on jobs and wages. So, best case scenario is that PCE comes in mild and at expectations or below, and monthly employment comes in, at expectations or below. I think that's the best case scenario, but not below by a lot. You don't want it to be in sort of that Goldilocks zone where, okay, there isn't necessarily too much concern about the economy, but there's enough concern to warrant a interest rate cut. Now, if we're looking at the individual names, so that's with regards to macro. Now, if we're looking at individual names, this is the past month, and you can see the brightest box here is Tesla, and that is up close to 10% in the last month. And it does appear that things are, starting to fall in place. Now, I've been talking about Tesla for a while now, and finally, it does appear that it's beating in terms of its performance a lot of the major movers in the market. Checking in on Tesla's Austin self-driving experiment. In July, they only had one safety concern. This is from the Austin City website. If you look at total incidents in Austin from all, so Waymo and others, from all the autonomous vehicle companies, those were around 8. So on average, Tesla's doing better than the average. That being said, there is no data about the number of rides that each company is providing. So all I can say is that one incident in a month, and it's just a safety concern. It's not a safety incident. No one was hurt. Nothing actually happened. It was simply a concern. There's no details given here, but that seems like it's working pretty darn well. And as I mentioned in previous live, they are looking to expand places like Chicago, New York, Miami, other cities in Texas, Houston, other cities in California as well. So this thing, it seems to be working, and that's really exciting. I think that is behind a lot of the strength that we're seeing in Tesla, and I think it's only going to compound from here. If your bags aren't full for Tesla, I think you may regret it. Elon Musk mentioned on August 14th, if they don't exit their short position before Tesla reaches autonomy, talking about the Tesla shorts, before Tesla reaches autonomy at scale, they will be obliterated. That is, the short sellers, the people betting against the stock of the company, will be obliterated. And I personally think that's probably true. And because autonomy at scale is basically going to be, better than a money printer. It's going to be a legal money printer on steroids. And so you want to own a part of that legal money printer. And that's why I position PIF very heavily in Tesla, and hopefully I get to position it even more heavily in Tesla, despite the concerns that I've heard. But this is still one of my highest conviction picks. And everything robotics really is going to turn to gold. And NVIDIA understands it. All of the leading companies in the world, they understand this. NVIDIA today revealed Jetson Thor, a new robotics computer designed to power the next generation of general and humanoid robots in manufacturing, logistics, construction, healthcare, and beyond. These robots are going to be everywhere. And who is I think has the lead in the software and hardware creation capabilities that position it to be a leader, a dominant leader in this space. I would say Tesla is at the top of that list. And so there may be some other smaller robotics plays that bubble up. But I think the biggest robotic play, the most obvious one, the most advantageous risk reward relationship is held by Tesla at this particular point in time. Very excited about how that stock is going to perform over the next 12 to 18 months. It's going to be a wild ride, and inshallah, we'll be here for it. What's your take on Biostem? I did mention this on Friday, Talat. My conviction level in this stock has really tanked after the last earnings. I wouldn't buy any more. Perhaps I would wait for a bump up and sell. Gixa says, welcome back. Well, thank you. I hope you're doing well. What are your thoughts on DeFi technologies? I appreciate your opinion. Thank you for sharing your knowledge. Well, I think with regards to DeFi, typically there's some element of interest-bearing loans that's going on. To the extent that there isn't, I think there's a lot of investable opportunity. I think it's a very exciting space. But so far, there hasn't really been, pure plays out there that I'm comfortable with, that I can confidently put money behind, where interest-bearing debt is not a factor. Typically, what has been the case is that there are loans, but also there's a lot of derivatives and perps and other stuff that basically creating risk out of nothing. Very akin to gambling, and so I've kind of stayed away. But I do think the space is prime for growth. What do I think about MetaPlanet? Yeah, I think it's kind of concerning to me that every company that is struggling is becoming a crypto treasury. I think to the extent BTC does well, these crypto treasuries will do well. You just want to make sure that you're not involved in a company that has interest-bearing debt as sort of an integral part of its operations. To be honest, I was looking at Open Door Technologies to sort of it's a company that they're not profitable. They've basically done 6x in a very short period of time. And I think it's almost become a meme now, Open Door Technologies. And I was thinking to myself, I wouldn't be surprised if this company becomes a crypto treasury pretty soon. If they just, sort of like GameStop. Like, oh, the business isn't working, so what are we going to do? Our stock price keeps going up. Let's just, buy crypto. So I wouldn't be surprised. But yeah, it gets me nervous when people, companies stop focusing on sort of productive activities and focus instead on accumulating crypto. So that's my take. Salam, brother Hamid. Nice to see you. Do you think HIM's lawsuit will be something the company will survive? Yeah, I do. Anything you would like to clarify about LFMD? Yeah, I was just really sort of uninspired by their last earnings call. I think that the ultimate challenge for HIMS and LFMD is creating a sticky product, not a commodity product. And HIMS is leaning into sort of personalization, which I get, which is something that it can make their product sticky and perhaps build loyalty, as opposed to just shipping medicines to your front door, which is just a complete commodity product. And even if those medicines are discounted and you pay for them cash, there's value in that, but other people can do that. And so when you don't have any moat around your business, it's very hard to have juicy margins, and typically you're squeezed on margins when there is no moat. And so that's really the challenge for this space. HIMS is, as I said, is leaning into that AI sort of personalization aspect of the business. LFMD isn't. And so what we're left with is basically, an online shipper of medicine. And they're trying to do vertical integration and all that, and that's nice. And well, it should help. But without a clear case for personalization, it's hard to sustain margins and profitability over the longer term. So I think that they're in a tough business. LFMD is. HIMS less so. HIMS is in a better spot, but LFMD is in a tough business. And as I always say, there are easy ways to make money and there are hard ways to make money. And right now, LFMD finds itself, as per their last earnings, in a tough business to make money. And I'm not talking about revenue. I'm talking about income. I'm talking about free cash flow, because that's what, as an investor, you should care about. And so that's why my conviction level in LFMD has dropped. Eagle MMA, Salaam alaikum, Rakaan. With regards to Tesla, there is a value you recommend to take profits. How much profit should one take? And should it only be when it hits the target? So I can't give you personalized advice, but I would never sort of sell out entirely of Tesla. I would, take profits and if things get overheated, but I think we're far away from that right now. I don't think that's a risk right now. So I would not sell right now. If anything, I'll be thinking about buying. Ali Imam. So the best trade sometimes is no trade at all. And typically, when you're thinking, should I sell? Should I not? Oftentimes, the best thing to do is not to do anything. Not investment advice, but that's how I think about it. Ali Imam says, Salam alaikum. You don't think the interest rate cuts are due to weak job market? I think if they defer cutting, it would risk a recession. I don't think the job market is as stark as the comment implies. I mean, could be wrong. Obviously, there is a lag in this data, but just from the previous data, and I just don't think there's necessarily capitulation. But it's hard to tell. We'll have to see how September 5th the jobs report comes in, and that will inform my view and obviously the view of the Fed. So with that being said, thank you for tuning in, guys. Do leave a like, become a PIF member if you haven't already. Until next time, make sure to take care of yourself. Assalamu alaikum and peace be upon you all.